asking him about the FY16 dollar revenue guidance.
7.2 to 9.2 on June 30 currency. It is that currency change now because of the fluctuations in the currency markets. And so that is on September 30 terms, it is 6.4 to 8.4 or whatever. But on constant currency, the guidance is what it has been since the beginning of the year, which is 10 to 12% constant currency growth in revenue.
So just clarification again, you have not cut the dollar revenue guidance in any way?
We have not cut the dollar revenue guidance in any way.
Okay. You know, you hinted, and I'm going to read between the lines in the press conference, you hinted that you will look at bucking the trend. So 10 to 12%, I know that it's a seasonally weak quarter, next 2 quarters, but would you be able to beat that?
Well, we are working very hard to beat that. We are endeavoring to beat that. But you know, we need to be, from a financial market perspective, be responsible based on what we know. And what Praveen and I see today is gives us tells us that we need to hold our guidance to 10 to 12. We are not revising it downwards or upwards. We are keeping it at what it is. But we are hopeful that because of all the work that we are doing, we'll be able to buck that trend this year and do better. Okay. That's where we are.
Okay. You know, Praveen, in terms of attrition, it has come down significantly ever since the new management came on board. What is I think your sweet spot, Praveen and Vishal's sweet spot is 14 to 15%. By when can you be able to come? Because there have been many initiatives that have taken.
Our attrition, quarterly annualized attrition is at 14.1%. So we are already there. We are where we wanted to be, 13 to 15%. We are already there. And in the last quarter it was 14.2. It's 14.1. So we are already in that range. And we will continue. It's not that we are declaring victory and all. We will continue with various initiatives to continue to engage with people. We have many initiatives. I mean, as part of the FAT initiatives, we have launched memorization. Then later on we launched the hackathon thing. Then we had the zero distance initiative. Now we have the zero bench. Apart from these initiatives helping us in the revenue side and doing things better, but it's a tremendous tool to engage people better because people are now excited about all the things, all the possibilities, and that in a sense is also translating into lower attrition.
Okay, deal win on a total contract value point of view has been significant, and that's a trend that happened last quarter as well. Will that continue, and is there still pressure that you're seeing from the top 10 clients?
Oh, well, the top clients have grown. Our topmost client grew by more than 8% in the quarter. Our top 25 clients grew 7.9% in constant currency, even though we have had a few structural issues in a couple of those clients, and some of them are in Australia where we had a significant negative currency impact. So in the top 25 clients, we grew by 7.9% on constant currency. So that is great. We feel very proud of that. When we look to the future, as Praveen was saying, the pipeline, the deal wins give us reason to be hopeful and feel optimistic. We did very well. Our teams did very well. We have significantly improved our win rates. We did close to $1 billion in TCV in the last quarter. So we are very excited about that. We had many large wins. So these will all, as we go forward, obviously start to pay their dividends. And so we are quite excited about that. And overall, in terms of Q3 and Q4, we see that seasonal dip, but we are working very hard to make sure that we buck that trend.
So the pressure or the pricing pressure that you were seeing in large contracts, is that continuing, and how are you trying to mitigate that?
I think that the downward pricing pressure is an ongoing thing that the industry is going to have to deal with. I have been saying that for the last year. This is a natural course of technology, and the way to deal with that is to do it with automation, with software. So if you look at, we had 57 Panaya deals that we did in the last quarter, 53 with Scava. These are all examples where we have gone away from the people-only model to a people plus software model. And when you add software to the people, we use less number of people per project. The margin with the software is much higher, therefore our margin improves. And because of the less number of people, our bandwidth improves so that we can do more projects. You know what Professor Mashelkar used to say, do more with less for more. So that is the virtuous circle that we are attempting to create. And you see, while the downward pricing pressure is a ongoing trend, is a secular trend, there is evidence that, I mean, with our performance pricing improvement in this last quarter, as you can see, that we are already starting to see some indication that this is